Right, very good afternoon to everyone. Welcome to today's session again. Today we'll be looking at the Bank of England interest rates. So how would that affect the pound dollar pair? And then if we have enough time, we will look at probably the pound futures. If that's with regards to the BoE interest rates decisions. Okay, today's the 7th of August. My name is Sherman. Welcome again. My background is in technical analysis, so we'll be doing quite a bit of that later on. Quick disclaimer for everyone. Trading any forms of derivatives carries significant risk. Do ensure you fully understand what you're doing before you make any trading decisions. Always start off with your demo account first before moving on to your live accounts. Okay, same thing, deposit bonus. If you are starting your live accounts today, do take advantage of the additional 50% credit that Vantage is running right now. And then if you're making any subsequent deposits, you get 10% additional credit. Okay, so today we'll be looking at the analysis done by Gemini. Just want to quickly go through what some of the key factors in terms of the macro overview before we dive into the charts. All right, so we're not going to look at this wall of text. Maybe we'll just highlight a few key things later. But the expected new bank rate is at 4%, and that is a 25 basis point cut. This is with respect to the dollar, which is still at 4.25%. Okay, so between these two currencies, whichever central bank takes the first initiative to reduce their rates, that will actually depreciate, or I mean the value will be weakened against the other. Okay, so U.S. Federal Reserve still at 4.25%. Today, the expectation is a 25 basis point cut. Okay, so few key things that we want to take notice for your with regards to interest rates. We're going to look at inflation. Is inflation still at the above the 2% target? Okay, the target is towards the 2%. Okay, the lower the better. Okay, right now, as of June, CPI annual rate for your UK economy is at 3.6%. So by lowering your interest rates, that will sort of what they're trying to do is to stimulate the economy, but that will flush the economy or flush the businesses with money because it's cheaper to borrow. And when that happens, we might see an increase in the core consumer price index. Okay, so price of goods and services will increase if the interest rates reduction decreases at too fast a pace. Okay. In terms of GDP, month-on-month growth is negative 0.1%. Again, this is the growth, so it's slowing down, but it is still growing, albeit at a slower rate. Okay, so the CPI since October 2022, that is sometime during the COVID, that was at around 11.1%, and now the target is 2%. September 2024 was the time where we fell below the 2%, and then you see it coming back up again. Okay. If you want to find out what specifically caused this increase, okay, you need to dive deeper into the breakdown of the because this CPI is the average of I think 20 products or 20 to 30 products, right? So you want to see what is causing this increase in price. And of course, if the increase in prices are due to your common food staples, right, then this will be concerning. Whereas if your CPI inflation was due to more luxurious items like houses and cars, then that it's probably a very inflationary sector. Okay, usually um, not too much uh, a cause for concern. Okay, so there's a breakdown by Gemini as well, headline CPI, core CPI, as well as the services inflation. And if overall services inflation increases at a faster pace than this other two CPI, the index, that is pretty concerning. Okay, so essentially, when economic growth stumbles, you would want to decrease your interest rates, okay, as a central bank to stimulate the economy, and that is probably the goal for them right now, because of this slowdown, where you want to encourage businesses to borrow money at a cheaper rate, to produce more goods and services for the economy, and hopefully that will kind of like a standard monetary policy for them to actually execute to get the economy up again. Okay, and also like with the tariffs, you are going to face stronger competition for businesses in the UK exporting to the US, and that, I mean, when you have that decrease in demand for UK goods and services from the US, which is by far the largest consumer or the largest economy consuming all of these products, right? Goods and services, that will also cause a big problem for the UK economy. Okay. Another big issue would be your AI coming in to replace a lot of these low-level jobs, low-level white-collar jobs. Okay. Manual labor, I would say, is still quite a distance before those get replaced. But white collar jobs, digital economy, anyone who found some sort of success in pre-GPT era in the digital economy, right? They are going to be the ones that are facing the biggest challenge when AI comes on board. Okay, unemployment rate at 4.7%. Again, yesterday we talked about this. 4% is the structural unemployment rate. So not too much of too big an issue right now. So something that we want to watch out for. Job vacancies, 727 K, and this is below your pre-pandemic levels. Okay, that's a concern. And your real wage only at 5%. Okay, when we look at real wage growth, we want to make sure that your real wage growth grow faster or at the same pace as inflation, such that the every dollar that you earn can and will pay for an equal amount of goods and services in the economy. But if it's growing slower than your inflation rate, then you'll be spending the same amount of time, but the value in which you get back from that every dollar uh, will decrease. Okay, so these are the three concerning key factors I think that is kind of like generic, but top of mind for anyone who's looking at the UK economy. Okay, so a lot of the central banks, you can see how they actually started to reduce that interest rates. Okay, very carefully. In the past, and this is somewhat lessons taken from the past, right? So in the past, when they see a slowdown in economy, they decrease the interest rates, and then inflation starts to shoot up. Right now, you can see that 3 months period in between your decisions, right? Looking at how each of these decrease will actually affect the economy, and as and when data comes in, they really decide whether or not a further decrease or further reduction it's in play. Okay. So whether or not it will survive or thrive, okay, that's up to you to decide. Given all this information, but this is what, based on all this information, a standard AI reply. Okay, so we want to look at this few key areas that is being mentioned by Gemini. Okay, so the current level is at 13300. Probably about 50 pips down and then 200 pips up. So essentially, you're looking at a kind of like a bullish call here, inherent bullish call here. So we'll probably look out for a buy on the pound dollar. Okay, anything below 1325, that would be your bearish momentum downwards. Anyways, slowing global economy, your protectionist governments led by the US, okay, and then of course, continued war in the Middle East, Ukraine, Russia, and of course other parts of the world, China, Taiwan, um, will actually contribute to um, a bearish signal to the pound dollar. Okay, so overall, I think this is pretty we'll take a look at, we have a slight bias towards the upside, and then let's look at the charts right now. You guys have any questions regarding the analysis done by the AI? Do let me know. If you have a question on how do you actually generate that same report, it's free right now from Google. So please make full use of that. It generates in like less than 5 minutes. So before the session opens, right, you can run all of this analysis, get the AI to run all of this analysis for you, so that when the market opens, you kind of have a generic direction of where the market will go. Okay, so let's look at the charts. It's taking a while for the charts to come up. Pound dollar. This oh, just give me a second. I think the stream is still not seeing my chart yet. Let's see, GBP. Oh, okay. So while we're waiting for the guys for the stream to actually get the chart, I will walk the guys on Zoom on how you generate the report. Okay. All right. So head over to gemini.google.com. Okay. I'll put the link in slides in future, but you can head over to gemini.com or you can search for Gemini, Gemini on Google. Okay, this is a free tool by Google. So and basically you want basically whatever topic that you want, okay, just place it in. Let's say today's topic is on interest rates. This is what's going to happen. You want to select deep research, okay? And then it will give you a rough starting plan. Right, let me just restart TradingView. Or I think what we can do is we can go straight in here, TradingView. Okay, this works too. Right. Sorry, let me just redo the demo. So when you come in here, you'll see the Gemini 2. And then what you want to do is you want to set the you want to set your topic in here and you click on generate. Okay, what happens is that it will come out a very nice plan, right? So research, basically, this is the plan that Gemini is going to execute, analyze result, create a report. You can actually edit the plan and then type in what you want. Okay, this is the future of user interfaces, right? So depending on what you want, you can kind of like ask it to change. When you're done, basically just click on start research. Okay. What you'll get is something like this. Okay, the full reports as well as the related content. An interesting thing is that you can actually find a lot of these new websites that you might not know of based on what Gemini has scraped. And then once you're ready, right, what you want to do is you want to create, basically go to the top right-hand corner and then ask it to generate an infographic. Okay, let me just, okay. Okay. On the right-hand side, you have this create button, right? You can create a web page, an infographic, a quiz, or an audio overview. And once it's being generated, you can actually share it with your friends or whoever that's interested in this topic as well. So pretty nice infographic being generated. I think they're using some Python library to generate this. Right? So pretty cool. Try it for yourself. Okay, so let's quickly look at the charts before we run out of time here. So let me know if you have any other questions on generating the AI tool, using the AI tool. Okay. Um, yeah. And we can actually go through a few other AI. GPT has it as well. Perplexity has it as well. Um, so you can actually try different research reports from the different companies. Okay, so this is pound dollar. Um, again, these are the key points, 1.3250. Okay, we just want to highlight those areas, 1.3520. Okay, change this to black, and then 1.3250. Okay, this is the support that Gemini has mentioned, and then this is, okay, this is the range that they're looking at. Okay, does it make sense in terms of, right? Sometimes your AI can hallucinate again, confirm it again. Resistance 1.35 and your support is 1.325. Okay, so these are the two key lines. I'm going to draw this and I'm just going to label it resistance and bracket Gemini. Um, let's put it to the right hand side. And then this one, right hand side, this would be our support. Okay. So on the daily, so this is AI generated. Okay, we are going to use a little bit more traditional tool called the Wayne's pivot points. And kind of look at what these lines, where these lines coincide again. Okay, for those of you who are new here, the pivot points is a very old indicator, right? And basically what it does is that it tries to map out certain key areas for resistance and support. How it is being measured, it looks at the previous period to determine these levels. Okay, so how you're going to add this, the one that we're using is called Wayne's pivot. Okay, you can search for this Wayne's pivot here. Okay, so key things, you have two resistance lines R1, R2, two support lines S1, S2. Pivot line in the middle. I'm not going to go too deep into the calculations. What you can do, if you understand code, you can actually open up this curly braces here. And if you hover over it, it will say source code. Okay. And you can see the exact calculations of this indicator. But quick overview, the pivot point is the average of last month's high, low, and close. We do not need the last point, which is the open, because that is the close of the month before. Okay, so just 3 points, open, high, low, and close. You get the average here, the pivot. R2 and S2 is equal distance from the pivot, and that's basically, and the distance is last month's range. Okay, from last month's high to last month's low, that's the range that we are comparing. Pivot to R2, pivot to S2. Okay, S1 and R1 is just a flip, which means that from last month's high to the pivot will be the same distance from the pivot to S1. Okay, so if we have a bearish move last month, our target to S1 will be of that equal distance. If we're bullish last month, then from last month's low to the pivot will be our distance, the pivot to R1. Okay, M lines are just a 50% of the major lines. Okay, so whenever we are bearish, we want to sell just above, below M3, above pivot. Our target will be M1, S2 at the bottom. If we are bullish, we want to buy pivot M2, above M2, below pivot, and our target is R2, M4. Right? Pretty straightforward. Okay, so we were in an uptrend, but the trend was broken couple of days back. Okay, that was on the 14th of July, the mid of last month. And if you extend out from there, you can see how that trend line was following, this price is following this trend line, and it breaks. That means it made a lower low from that bullish move up. Okay, so overall, I would say we are bearish. Okay, okay, and again, back to Gemini. Okay, it did not give us a kind of like a clear indication, but okay, overall, I would say if you infer from this, it's kind of, and if you're reducing the interest rates also, right, that will actually cause pound to actually depreciate against the dollar. One line here, a daily close below 13250 could signal a bearish turn. Okay, so this is Gemini's point of view. If there is a daily candle that closes below this, then it will be bearish. Okay, so still quite a distance away. I'm just going to draw Gemini's plan, how I think Gemini would have traded it. Okay, so if this is something that you're looking for, this is actually a conservative sell-off. Okay, but I would say that this downward trend here again would provide another opportunity for you to sell off back down to 13250. Will this be that resistance? Maybe. Okay, let's look at the lower time frame to kind of to see if this is possible. Okay, overall, your resistance for your from Gemini is at the M3, which is the area that will sell off if we're using the pivot point. So two confluence here. If you go down to the 4 hours, you see the same exact lines for the weekly. Okay, this is the weekly, and we're probably going to end the week bullish. Okay, we're right at the top of M3. A break above M3 would signify the desire for buyers to actually go up higher. Okay, that might be to R1, which is our monthly M2, or all the way up to this resistance here. Okay, really looking closely at this brick here. Okay, very key for us here, because this was where if you were a buyer, you would continue this buy here, right? So this was the small group of buyers coming in. Okay, and as it comes into this level, it cuts right through. So if you were to kind of make this a little bit more accurate, I would say somewhere around this level, 134746, is the failure of the buyers to push up higher. So if price do actually come up here, you will not be able to see price move further up because all of the buyers here were stopped up. Okay. So definitely an attractive price for sellers to sell around this area. Same thing, downward diagonal overlapping with a fair value gap, bearish fair value gap that broke a previous support. Okay. I'm gonna highlight this a little bit darker to show that, okay, this is our analysis, just slightly below the resistance where Gemini told us to hold it. Okay. Okay, this is kind of the weekly plot. So essentially, I would kind of want this wick to be bullish all the way up into this area before I start looking for sells. Okay. Otherwise, you would need to see price break below. Again, same thing, either today or tomorrow, close below 13250. And then it's going to be a plan for next week. Okay, so it is much easier for us to find an entry for a buy up towards this area than for the whole play to cut below 1.325 and retest. This is going to take too long a time. So we're probably going to focus on the lower time frames towards the upside. Okay, short-term bullish, long-term bearish. Okay. So this is the daily. Yesterday we were a little bit aggressive. Buyers were a little bit aggressive on the buy. Okay, so our best bet would be somewhere around this area or the break of this high here. Okay, somewhere around this pivot, 1.33359 is a nice retracement for us to actually push it all the way up here. Okay, point of caution would be that the move happened somewhere around here. Okay, so double top, break below. So there might be some impatient buyers coming in here, but I would say that this is actually the true failure of the sellers. So if given a choice, I would try to target an entry from here up to this area here. Okay, but if we do get sufficient data or information that this is going to be a support, then we will be a little bit more aggressive in the buys. Probably not today, because if for price to actually come all the way down to S1, this is actually a bearish move. Okay, so same thing because of if we're looking at just today, right? For price to actually come down to S1, that is quite bearish on the pound dollar. Okay, and if we maintain that bullish move to this resistance here, I would say this would be our best bet. Okay. Okay, risk to reward is pretty bad. So I would stay on the safe side and take at least 1 to 3. Okay. Yeah, I wouldn't want to put my stops above this high because this was the first push, right? So you do know that the buyers are coming in here and your sell stops will be protected by this move here, right? And if you did in fact get triggered, your stops get triggered, it's fine because this were where all the buyers were coming in. So we're gonna get out together with them. Okay, you can actually be more aggressive here, but it's only 1:2. I'm gonna take 1:3 somewhere around this area. All right, cool. This is where liquidity sits. This is the daily open. Okay, if you go down to the low time frame, all right, you will see the daily open here. Okay, so it might make sense that this entire area here is already filled with sellers, right? Okay, this entire blue zone here is filled with sellers. Let's put red as sellers. Okay, so if this entire red zone, you know there are a lot of sellers here. As a buyer, you want to buy from this group here, right? There are sellers selling at every price level from this level all the way up to here, right? But you will be taking it at a very high price, okay? So if you are concerned, if you are starting off with a small account and you are looking to buy pound dollar, you will want to find sellers who are selling below the opening price of today and take those orders as your buy orders, right? That's the best. As a buyer, this is where the best entry you can get for today. Okay. Which means that now, right now, you're going to find out where to put your stop such that if it goes beyond that area, you are going to get out of the market. Okay. You will probably put somewhere around this. Okay. This is a very interesting zone because this was where both buyers and sellers were indecisive and it broke outside, right? Broke out of this triangle. So this entire area here, this is where the last group of sellers failed. You want to put the stops just below this area here. Okay. So this is a little bit, this is 1:5. You can take a bet. Probably the best bet would be around this red zone here. There might be some algos that are taking this move here. Okay, so for us to actually get there, you probably do something like that. Then up, 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 up. What would be a better bet than this entry? This entry here. Oh, it comes down further. Okay, something like this. Okay. This first trade here is based upon yesterday's move. This entry here will be based upon the actions of today's move, coupled with yesterday's move, and we'll take the high retracement up to this upper boundary. Okay. And of course, you can set it to the Google target, which is at 1.350 as well. Cool. Yeah, that's about it for today. We are probably not going to go through any other symbols because this was kind of like the key thing, a key symbol to look out for. But I think we can go through some. We talked about this yesterday. Okay, we talked about this sell-off here, and then sell-off. Okay, we wanted to take the entry at the pivot, and then too many sellers here push it above. When you have only one side of the market in trading, right, this usually happens, right? If you have too many sellers in the market, the sellers themselves become the buyers when they get impatient and they try to get out the market. So you kind of need to be careful when the area becomes too obvious. You just want to make sure that you understand the dynamics of having too many sellers in the market. Okay, so this was what I was talking about. You have this support here cut through, okay, and as it comes up here, this becomes too obvious a sell area, which means that the entire market only has sellers, okay? If it takes too long for it to break below the previous low, okay, for it to do something like this, because if there are sufficient sellers here, right, it hits this point, it should move down, okay? And if it takes too long to do this, the sellers will start to get impatient and they'll try to get out of their position at break even or at a small profit. Okay, when they do that, they will trigger this kind of movement. And then as it breaks above this high, this is going to bring in all of the buyers who are waiting for this high to be broken. And then that's why you get that higher high. And this area will be, of course, a critical area, right? Because the sellers failed here. Whenever price revisits this area, you can be assured that price will not fall below this area any longer. And then you continue to either move up or just range if, depending on how many buyers or sellers there are in the market. Okay. So same thing in this downward trend, you can say this is a bullish flag. It breaks out, again, key level, it's here. Okay. Same thing, breakout, key level becomes the point in which it started that move up. Cool. Okay, so for those of you interested to find out more about Gemini, please, you can find all the information on their website. Okay, this is free to use. And you can actually choose the type of model. The most expensive one right now, it's called 2.5 Pro. It's free for a certain number of queries before they start to charge you. So, but 2.5 Flash is sufficient and it's free for you to use. Mhm. So any factors that means to get a push to 1.35. If you're looking at macro, okay, this is your pound dollar, 15 minutes. We have, okay, so this is your interest rates decision, which is coming up in about a 2.5 hours. Okay, so that would be your catalyst. What catalyst would that be? If it remains at 4.25%, or even if it's at 4%, I would say there'll be a short push up and then down from there. As you can see, the 1.350 resistance. Again, you can do all of this in Gemini. You can ask Gemini why did it define how does it define a support or resistance? And it basically will give you the information. But from a technical perspective, okay, this was a spike on 17th of July, okay, and then as it breaks above, okay, this was supposed to be that support, right? This entire area was supposed to be a support, and as it comes into this level, it cuts right through. So this becomes a flip zone, or if you're, I mean, if you're doing technical analysis, this becomes a flip zone where it used to be a support region, right? And as it cuts through, it becomes a resistance. The underlying reasoning for that is that you have a lot of buyers sitting at this level, resting buying orders that took up all of the sell orders. And given that range, this was the worst of price for sellers. Okay, between buyers and sellers, this was the worst of price for sellers. This is the best price for buyers. But even so, whatever happened on this day, 25th of July, sellers were willing to sell at a worse off price and increasingly sell off at a worse off price on that day, which means that any buyers who attempted to buy here, they are gone, right? And if you're given this sort of range, if you're a buyer, there are so many other opportunities to buy at a discount. If price do get back up to this level, there is no reason why buyers will want to buy this unless you have a fundamental or macro-driven reason to push pound above this area here. So from a technical standpoint, with no external knowledge of macro or fundamental reasons, you're not going to find any buyers willing to pay this price to push price above. And when you can't find any buyers at this area, then price can only go in the opposite direction. All right. Cool, cool, cool. Hopefully that answers your question. And if you are using Gemini, again, I'm not trying to sell Gemini, but you can ask follow-up questions. Oh, before that, this is kind of nice to look at a high overview, but you can actually dive deeper into the analysis that was done by Gemini. Okay, so and all of these key numbers here, you can find it all on the official websites. But it's nice that Gemini actually scripts all of this information for you. Okay. Uh, okay. So all of this wall of text all converted into the infographic for us to actually understand it a little bit better. But if you scroll all the way to the bottom, is there an explanation? Okay, so somewhere around here. Yeah, somewhere around here. Okay, so you can actually ask additional follow-up questions to Gemini depending on what you're more interested in. And Gemini will kind of explain in detail why they came up with those numbers. Some of this might be quoted from certain websites. So you scroll all the way down to the bottom, there are this whole lot of websites. Or they can actually infer and reason based upon the information that they retrieved. So yeah, a lot of it from Bank of England, which I mean supposedly is the definition of the question. So you just want to make sure that some of these websites are legitimate, right? Yeah, and also like information from some of these analyst reports from the big financial institutions. Okay, cool. That's all I have for you guys. Hopefully this was useful. We'll take a look. We'll probably dive deeper into like some of these AI tools. Another AI tool, to see how you can actually generate some of these research papers on the fly in less than 5 minutes. Um, for those of you interested in the bonus, this is the website to go, vantagemarkets.com. And then if you have any questions, feel free to email support@vantagemarkets.com and just quote my name, Sherman, and I'll get back to you. All right, with that, all the best to the upcoming trading session, and I'll see you guys again next week.